Hello and welcome to Earthfile. I am Ayola Kasim. It was the World Environment Day on the 5th of June, and the message for this year's celebration focused on the illegal trade of wildlife. The United Nations Environment Programme is calling everyone to take action to help safeguard species under threat for future generations. When you really look at it, human activities have eroded natural capital, especially in the last 50 years. Increases in population and prosperity have led to growing demand for food, housing, land, and transport links. At a global level, these pressures look set to persist and intensify in coming years. So how much is our natural capital worth? What do we gain when natural capital is part of decision-making, and how can our natural capital be managed? These are some of the questions we will be looking at today on the program. Do stay with us. Some have described nature as an angel investor in the global economy, financially significant, yet widely unknown. The global pharmaceuticals industry, for example, is worth some $640 billion. But few know that up to 50% of this market is based on the genetic diversity of wild species. The United Nations Environment Programme reports that the use of these natural resources is generating environmental and social costs to the tune of $6.6 trillion a year, costs that could climb to $28 trillion a year by 2050 if we fail to take action. So while we reap the benefits of nature, we are undermining its valuable inputs. Human activity has substantially degraded the natural environment. The global stock of natural capital and valuable goods and services that it provides are being rapidly depleted, in some cases irreversibly. An ecological crisis is taking place all over the world. By some estimates, 28% of global biodiversity have been lost since 1970, and species are becoming extinct at an unprecedented rate. Environmental economists have been working on valuing nature for decades, but only now is the proposal being taken up more widely. The basis of the natural capital approach is that we currently receive everything from nature for free. This includes food, fresh water, pollination, climate regulation, and soil formation. An economic value needs to be placed on the ecosystem services humans receive from nature. Otherwise, the environment will continue to be destroyed because it is valued at zero. The idea is, if governments and companies are aware of the full economic value provided by the environment, they will be able to make informed decisions on the impact of their activities.
We need to invest in natural resources, whether we call it natural capital, whether we call it natural resources, but the basic premise here is that investment in natural resources is good for the economy, it's good for business. In addition to that, we're also talking about investing in human capital, because these are the two cornerstones really for achieving sustainable development. And if we miss on that, then we have missed the entire goal of achieving sustainable development. Linked to that is integration. And this is a key word, and I always keep on pressing on this. So we're talking about integration between the three dimensions of sustainability: social, economic, environment, and I would even go beyond that. It's not just integration, it's even starting with investing in the environment as a key entry point for achieving the social goal, which is creating jobs and improving human welfare and health. And the economic dimension, it's clear that you're investing in natural resources, so you're achieving efficiency in the use of resources, allocation, better allocation of natural resources, and at the same time, the value addition bit and enhancing competitiveness through better use of resources and so on and so forth. So it's not just integration of the environment across, or starting off with investing in the environment and human resources, but working across sectors.
Nature is priceless. However, it is not valueless, and there are now many studies around the world which have tried to calculate natural capital in financial terms. For example, it is calculated that avoiding greenhouse gas emissions by conserving global forests would be worth $3.7 trillion, or that insect pollination is worth $190 billion a year to global agricultural output. The business case being put to the private sector is that it is in their interests to use their natural capital assets sustainably in the short term as a way to guarantee long-term profits. By depleting natural capital now, they put their supply chains and future productivity at risk. Fisheries, which support the livelihoods of millions of people around the world today, poorly managed fish stocks threaten the future of this important industry. According to the United Nations Food and Agriculture Organization's report on the state of the world's fisheries, almost 30% of fish stocks were estimated as overfished in 2011, while fully fished stocks accounted for more than 60%. The World Bank and the FAO estimate that better management of marine fisheries will not only improve the sustainability of this important food source, but increase income by some $50 billion annually. The ecosystem service value of tropical forests is estimated at $6,120 per hectare per year, while the cost of losing forests at the current pace amounts to $2.5 trillion per year if all ecosystem services were accounted for. Despite this clear macroeconomic case, the total yearly forest loss averages about 30 million hectares per year, representing the surface of one football field of forest being destroyed every 3 seconds. This continued loss and degradation of forests represents a massive market and policy failure.
There is a lack of understanding of the importance of our natural capital. And people fail to understand the interrelation and the interdependency of our natural capital, poverty, and development. And because the economics have failed to come up with a model and to place a price on our natural capital, the lack of appreciation has led to depletion of forests, degradation of our mangrove areas, and it's in many places it is only in now that the governments are waking up to the fact that you cannot, and let me emphasize, you cannot replace some of these natural capital when they have been exploited by mining companies or other extractives.
If managed well, natural capital is a long-term asset. It does not depreciate and can represent a cost-effective way of achieving multiple development goals, such as food and water security, climate change mitigation, and adaptation. Several recent developments suggest that 2016 is the year natural capital measurement and accounting will be more widely adopted by businesses to manage risks and dependencies, avoid impacts and costs, identify economically efficient business alternatives, develop sustainable product strategies, and engage stakeholders more efficiently. The recurring question is, why should this be critically important to all of us? The reality is that understanding overall stocks of natural capital and monitoring stock changes is vital at a national level. This understanding informs policy interventions and highlights whether countries are really creating new wealth and well-being or simply converting one form of capital, which is natural, into another.